Historically, we've had an issue of knowledge, so a lot of investors haven't really understood the market. They've been worried about the risks, but now that we're realizing that, or the investors are realizing that there's risk everywhere, there's high risk everywhere, people are kind of looking and learning more about the African markets as they start to develop asset classes that are investable from an international perspective. So as they understand the risk, as they see the return potentials, more and more international investors are looking to come into these markets. And we're now really at the cusp of the floodgates opening, I believe, and investors coming in an institutional way, and also from a large private investor pool into the East African markets. We're going to be seeing more high net worth individuals investing in platforms that return yields in line with the interest rates, or stronger returns than if you were to borrow at such strong interest rates. So we're going to see less borrowing, a lot more investment either of pure equity or at lower debt to equity ratios. We're hopeful that those interest rates are going to start to come down once the Fed lowers its rate. In hopefully the next 6 months they're going to lower their rates, and then there's always a lag and then a knock on to us. But yeah, ultimately it means that borrowing is probably going to slow down quite a bit, and we're going to see people investing in the type of investments, money market investments that see returns from those interest rates. We're in line with the world in terms of the want to develop real estate that is a climate impact negative at least, or has some sort of efficiencies from an energy perspective. And the reasons for that are twofold. One is the responsibility we have to the planet, and the other is the actual return on investment. Ultimately, long-term, investing in efficient buildings that don't waste power and conserve heat and are well built and so last longer, are future-proofed, will yield you positive returns and also attract international tenants. A lot of international global firms will not occupy buildings that are not certified to a certain threshold of green certification. I think it's an important report for a lot of reasons. One is it's demonstrating the fact that we now are starting, and while it is the very first report, so we're still a long way away from having the data we'd like to analyze, it is all these types of data analyses and projects are a journey, and this is the first step on that journey. So soon we'll have enough data to really give more and more meaningful information. What I think it highlights is the returns that are possible in this market from an international investor's perspective, something that international capital is looking for homes that are going to give it more money, and we've seen, like I mentioned, the Middle East and Europe struggling a little bit. The Middle East is cooling down. It's not yet really struggling, but it's starting to cool down, and it's quite risky if you're an investor and you're starting to look at markets. We're in a politically stable market. We have financial systems that function, judicial systems that function, infrastructure that's improving, and a growing marketplace in terms of middle-class Kenyans who can afford to spend money. So we have access to the continent from here. It's a great place to come and invest. Yeah, all the markets in East Africa have their pros and cons and their nuanced difficulties, but ultimately we're seeing really positive growth across Uganda, Tanzania, Kenya. Rwanda has been a great example of how to do things right, even though it's a tiny market. Uganda, has its difficulties from some of the sentiment that comes out of the leadership, but at the same time, it is a strong market, and ultimately the private sector will do well there. As a sister country to Kenya, and the EAC is a growing base of 200+ million people. So it's East Africa as a whole is a pretty good place to come and spend your money.